Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about 3 companies that I'm planning on buying this week. As always, please remember that this is not financial advice. This is just me sharing what I'm planning on buying. So with that said, if you are new to the channel, if you're looking for great dividend companies that you want to learn about and possibly invest on, you've come to the right channel. Hit that subscribe button, hit that notification bell so you don't miss out on these companies that I look at and videos that I put out. With that said, let's take a look at these 3 companies. So the first company that I want to share to you about is Ford. Ticker symbol is F. This is a company that builds SUVs, trucks, vans, and they're more leading towards EVs now. So one of the things I'm really excited about is the F-150 electric van truck. So I'm definitely one that when it comes out, I'm definitely going to go and purchase that. It's definitely a brand. Ford is something that I really like. I'm a big fan of Ford, so why not invest in the company itself? So if we go to Simply Safe Dividend, based on their dividend safety score, they rate it as borderline safe. The dividend yield is 2.54. Market cap is about 63 billion. If we look at the key metrics, you can see payout ratio is 6, which is very low for automakers. No dividends paid on previous recession on 07 to 09. Now, if you look at the dividend growth, it's not as great. Yeah, this is just more of a long-term goal, long-term investment that I think Ford is going to be one of the top automakers in terms of EV. So as you can see, based on the dividend growth, it's not as great. So they have 0 consecutive increases, 0 without reduction. If you're interested, your payout is quarterly based on March and December. Annual payout is 40 cents per share. Now if we look down to some of the financials, you can see going down to the return on investment capital, you can see 6%. So and then return on equity is about 45%. You could see the total sales in the billions, shares outstanding in billions. You have earnings per share growth, as well as earnings per share, free cash flow, and you can see the earnings payout ratio as well as free cash flow payout ratio. Now if we go to tip ranks at the time of this video, I think it was like $18. Sorry, it's stuff. So with the annual payout of so the target rate is 23, 46% upside. The high target is in the high of $30. The average is 23, and then the low is $13 with the rating of 16. Moderate buy, 8 buy, 6 holds, and 2 sells. Now if we swing by Webull, based on their analysis, they rated it as a hold. 23 of them said, about 39% it was a hold. You got a buy of 30 and a strong buy of 13%, but their price target is pretty similar. You can see in 30 with the high, 21 with the average, and 13 with the low. Now if we swing over to CNN Business to kind of get a comparison, you can see pretty similar. High of 30, 22 is the medium, 13 is the low. Their analysis recommendation is about 8 buy, 3 outperform, 7 holds, and 2 sells. Now if we go over to Simply Wall Street, based on their valuation, this is their share price and fair value. They rated it as 60% undervalued. Based on their analysis, they rated a fair value of $39. Currently, it was $15.74. Now, if we go to the company overview, you can see some of the analysis: undervalued with mediocre balance sheet. So debt is not well covered by operating cash flow. Dividend is not real. So they recently cut the dividend, if you remember. So, but then they put it back now. So those are just some of the risk about Ford. Now, if we go to Robinhood, you can see the performance. It was down almost 2% for the week. It's down 6%. For the month, it's down 11%. 3 months is down 21%. For the year, it's up 17%. 5 years, it's up 25%. So I do have a position. So I have 60 shares. So total return is about negative 2%. So I plan on increasing this position. Probably I'm gonna dollar cost average to it, possibly maybe 1,000. So I'll just continue to wait until my as you can see at the time of this video, it's $15. My average cost is 16. So continually to what I call nibble, buy 2 shares here, 3 shares there, 10 shares here, slowly, surely increasing my position throughout. I'm not gonna buy 100 here for now. I'll just kind of nibble because the market is very volatile right now. So I want to get the most dollar cost average as best I can to lower this average cost. So the next on the list is Realty Income, and one of my favorite companies. Yeah, if you can see, it's a monthly dividend company. You can see, if you don't know about this company yet, you can see it's a REIT. Basically, it is a company that owns some of these buildings like Walmart, CVS, and all of them rent out the structure. Now, if we go to some of the PowerPoint presentation, you can see it's one of the S&P 500. You can see top 10 global REITs. So their plan is to be in the top 5 global REIT, consolidate 12 trillion global lease addresses, and all these things right here. So definitely, if you want to learn more about them, go to their website, check out the PowerPoint presentation, get a little bit more information on there. Swing by to Simply Safe Dividend based on their dividend safety score. They're rated at 70, which is safe. Dividend yield is 4.56. The market cap is about 38 billion. Now, if we swing by to some of the key metrics, you can see payout ratio is about 79, which is low for REIT. They have increased their dividends during the recession. You can see the dividend growth. Last 20 years, about 5%. Last 5 years, 3%. Last 4 years, which is 2%, which is slow. So you can see there was pretty good increase as the years go by. 27 consecutive increases, 27 years without a reduction. You do get paid monthly with the annual payout of $2.96 per share. Now, if we look at some of the key metrics, you can see total sales right there. Now, investment, return on investment, 2%. Return on equity is about 2%. Now, if we swing by tip ranks, at the time of this video, it's about 64. They have a moderate buy based on 10 ratings. You got about 6 buy and 4 holds. The price target is about $75 with a 15% upside. You can get the high would be 80, 75 is the average, 69 is the low. Now let's swing to CNN business. You can see 86 would be the high, 78 would be the low, and then 69 is the low, and 78 is the medium. Their recommendation is 9 buy, not 2 outperform, 9 holds. Now let's check out Simply Wall Street based on their valuation, their share price, and fair value. Wow, check this out, 61% undervalued based on their analysis, they rate this one as 170, with currently about 64. Now, taking a look at Robinhood, today was down 0.72. For the past week, it's down -2%. Past month is up -3%. I'm down. Past 3 months, -3%. For the year, it's only up 5%. And then for 5 years, it's up 16%. So I do have position at 52 shares, with the average cost about 66. So at the time of this video, it's at 64. So I'm gonna definitely start purchasing a little bit more to get the my average cost down. My plan is to get at least 1,000 shares for this one. I love Realty Income. I think it is one of the staples in my portfolio. So if you haven't done so, definitely check this company out. Definitely, in my opinion, it's a great company. And then the last one is Aapl. The ticker symbol is AAPL. I don't think you need an introduction for Aapl. I think pretty much everybody has some sort of Aapl company, Aapl product in their house. Now, if we swing by Simply Wall Street, you can see, Simply Safe Dividend. Based on their dividend safety score, they rated as 99, which is very safe. The dividend yield is 0.58. Market cap is, check that out, 2.46 trillion. That's crazy. Now, if we look at the key metrics, 14% is the payout ratio, with the dividend growth streak of the 9%, which is fast. The latest is 7.3. You can see from there. 9 years of dividend consecutive increases. 9 years without a reduction. You'll get paid quarterly with the months of February, May, August, and November. Your annual payout is about 88 per share. Now, if we swing by some of the financials, you can see earnings payout ratio 14%, free cash payout ratio is about 14%. Now, looking at the sales, check the sales growth. Now, return on investment per capita, you can see 60%. And then return on equity is about 146. Now, simply tip ranks, you can see strong buy based on 28, 23 buy, 5 holds, 0 sells. Price target is about 193 with a 28% upside. You get your high of 215, 193, and 161. Now let's look at CNN Business. You can see 215 is the high, 192 is the medium, and 127 is the low, with the 28 recommendations of buy, 6 outperform, 8 holds. Simply Wall Street, based on their valuation, you got share price versus fair value, 23% undervalued. Their fair value is about 195. Currently, at the time of this video, is about 150. Now, swing by Robinhood, you can see it was down almost 3% today. For the past week, is down 7%. For the month, it's down 11%. 3 months is down 13%. For the year, it's up 24%. Past 5 years, 34%. So my average cost is about 138, and I have 35 shares. So I'm definitely going to continue to buy and dollar cost average this one. So Aapl is definitely one solid company, in my opinion, that is always going to be part of my portfolio. So I'll definitely continue to increase my position in there. Alright guys, that's it. Check me out on Instagram, same name, Mr. Dividend Investor. Also, if you have time, go check out some of the videos. Alright guys, thank you so much. Please like and subscribe if you haven't done so. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.